Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to look at two tickers that have shown good implied volatility in the recent markets. Now, as of late, and of course as we actually saw the selling kick in towards the end of last week, the VIX has popped back up, and that's been great. But there are several tickers that still haven't had that great of implied volatility in and of themselves. Monsanto has been pretty good, but the thing that you've got to be careful about is that we are coming up on an earnings date. So when you look at this, of course you could drill down and find the exact date for earnings, or you could just look at your options chain. And most always, you're going to be able to look at these chains and quickly identify, okay, this implied volatility and this implied volatility have a very sharp jump in each other, and most always suggests that these earnings will affect this series of options and not these that expire in the next 4 days. So with that in mind, and as I look at the chart that's got kind of an interesting bullish setup, there's two ways you could look at doing this. If you just wanted to straight up sell premium, the place that I would be looking is the short 108, 107 put credit spread. You can see there's a little bit of activity there, and that will be, that will completely avoid any impact from implied volatility. Now into next week, we could look for the implied volatility to continue to rise, and it would be nice if we erred on the side of being bullish and that played out too. So it is a directional bet, but buying an option out here is basically trying to get on both favorable sides of the IV, sell the short term, buy the longer term, and that's one way to look at that into next week. And one other place I wanted to look at was GDX. Now this one is a little tricky because as we head into the end of the week, this could be a very volatile market, so you really have to be comfortable with the risk that you are looking to put on. But with options, you can always have a very clear understanding of what you're getting into, and then even if the miners do get hammered later into the end of the week, you still can define your risk. I like the idea of going out either into the contracts with 11 days of life or a bit further and working those exact strategies that I shared in Monsanto and looking at placing those in GDX. So those are two places that I think you can look to stay involved, still keep your risk in check, and not make yourself crazy into the end of the week. I hope you find those ideas helpful, and I will see you at the next free video.
Hey everybody, one thing we're going to be doing for tomorrow, and from time to time, just kind of like to look at other, what some other traders are doing and what they're looking at. And Tom, if you guys know Tom, he had started Optionetics, has been involved in trading, and just had some interesting stuff on gold, and said, hey, okay, well, why don't we, if you want to talk about that, we can just talk about that on the webinar tomorrow. So we are going to do a webinar at 7 p.m. Central. Tom's going to come on and talk about his gold trades that he has coming up. It's one of the markets that he likes to trade a lot, and utilizing options. If you guys are interested in this, it's always good to kind of get different points of view and different ideas. Just come down here, first name, last name, put in your email address, and there's a submit button, and you'll be locked and loaded for tomorrow for this free webinar starting at 7 o'clock Central on Tuesday. All right, you guys have a good one.